You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glenn Sarvati.
Welcome to another edition of the Big Cast. My name is Glenn Sarvati on behalf of the Best Innovation Group, where we like to do cool things with financial technology. And we are going to try to rattle through a whole bunch of stuff. Just kind of catching my breath after a very eventful Money 2020 conference this past week. And we've come back with three interviews that we'd like to share with you from there. Two of them with very thought-provoking startups, companies called Eloquent AI and Rentflow. And we also have an update from the general manager of Pays following his time on stage talking about digital wallets. And we'll share with you what we also came away with as some of the key themes of the conference as well. Because we're trying to rattle through this stuff so fast, let me just dispense of some of the pleasantries really quickly. You can always find more about the Best Innovation Group by checking out our website, big-fintech.com. We also have the CU Town Hall coming up again on Wednesday, November 19th. That's on a Wednesday. That's a live session, 3 p.m. Eastern, noon Pacific. You probably know the drill already. If you don't, cutownhall.com will explain it to you. We'd love for you to join us. It is free to attend. You do need to register in advance, though. And then if you go to CU Town Hall, get a feel for what this is all about. We've got some of the past episodes or sessions, whatever you want to call them, posted there. Have a look. Now, let's see a couple of other news items, because the whole world didn't just kind of come to a stop with Money 2020 going on. A few other things happened last week I think I'd be remiss in not at least mentioning. I'm sure by now you've seen the news on Fiserv, the core provider for many credit unions. Over 1,200, as I recall, as Chip Filson pointed out, and we'll get back to that in just a second. Fiserv lowered its 2025 forecast in a pretty dramatic fashion and lost almost half of its stock price value in the course of just a couple of days because of that, 47% to be precise. There's so much that's been written about it. I'll let you find that yourselves, but we'll probably be talking about more of that in the not too distant future. Not only was it a bad quarter for them, but they cut their growth forecast from a 10% organic revenue growth rate. This is for the full year 25, which only has 3 more months to go. Suddenly it's like, oops, no, it's going to be more like 3.5% to 4%. So less than half the growth they were expecting. And it pretty clearly from talking to folks, this is not a one-time shot. It's going to be kind of a long-term reset, I guess, for lack of a better way of putting it. Chip Filson, who I've mentioned before on this show, does a great job with his blog. He wrote a thing, again, because there are so many credit unions that use Fiserv as their core provider. He had some thoughts on that one, and I weighed in at the bottom of that too. So we'll post a link to Chip's article. I think you'll find that interesting. The other big story this week, again, this one seemed incredibly inevitable to me. A judge has suspended the implementation of the open banking provisions. This one gets pretty wonky. We already were in the process, as you probably remember, of rewriting the Section 1033 open banking provisions. But technically, nothing had been done to stop the current version from going into effect. They were going to be applicable to the largest financial institutions by this coming April. That would not have affected any credit unions, I believe, because it was only very large financial institutions. There's a longer trail for the others. So that's been basically kind of put on hold for now. Kind of, as I say, a little bit wonky, but just to make sure that you are aware of that. The FinTech Association, which has been a big proponent of open banking, was on stage several times. Their CEO, Penny Lee, I think I saw her 3 different times moderating panels at Money 2020. They are taking a very strong stance now, not just being supportive of open banking, but on the no fees, no cost recapture, you can't charge for providing the data angle. That's where I think things get interesting, and it's likely to be a place that the rewritten rules are probably going to show some revisions. So that's another one that I think is going to be worth watching. The overarching themes, and they're always kind of, I don't think these are going to be too surprising to people, but the biggest themes of Money 2020 this year, and it was a very immersive show, I have to say. The biggest one was agentic AI. That was the single biggest headline that I came away with. The other one had to do with stablecoins, and we'll get back to that in just a second. But on the agentic AI piece, PayPal made an announcement along with Google Cloud and also with MasterCard in the play as well, about a new protocol around agentic AI payments, because this has always been one of these, always been, the thing has popped up so quickly, it's hard to say anything has always been this way. But this whole question of whose responsibility is it when, if my agent talks to your agent and all of a sudden I've been shipped something that I don't know what it is and I've approved, who's technically approved that payment? Am I on the hook if my agent said okay? There is a new protocol, I think is the best way of putting it, that PayPal and Google Cloud have put together, which actually adds some, I think, very welcome friction into the mix. They are basically kind of creating kind of a checkpoint on each side of the equation, a cart mandate, as they call it, shopping cart, and a payments mandate. So the two players in the transaction will have an opportunity to say, does that shopping cart look legit to me? Do I really want to fill that up before the agent just pushes it through to fulfillment? And the buyer can say, oh, okay, that's making this purchase for me. I'm just going to click OK before we go ahead and fulfill it. I think the vision is that there will be thresholds that you can set and say, don't bug me if it's under $50 or whatever, or don't bug me if it's paper towels because I know I'm going to order paper towels, whatever. But I thought that was a pretty important piece. Another thing that came up on the agentic AI side, Max Levchin, who is the part of the PayPal mafia, as you may know, and also the founder of Affirm, he made the comment that agents will be smarter than humans, which I think is one of those disturbing things we've talked about before. And then kind of on that same tone, Dave Birch, one of the thought leaders in the space, also made the comment that bots don't have better things to do. And his point was, again, kind of reinforcing that agents are going to be smart. A lot of things that humans just couldn't get excited about carving out enough time to deal with are things that they're probably going to go ahead and let their agents do. They might want to spend more time choosing clothes and shopping for shoes and things like that. If they say, hey, get me a better deposit rate on my savings, that's probably something they're going to be willing to let the agent go off and do for them. And he was kind of ringing the warning bell to banks and credit unions about how that may cause a real challenge about how low-cost deposits are being provided and have been for some time. PayPal was actually very active with announcements there. They also spent a good bit of time talking about how they're finally going to go about monetizing Venmo. And a lot of that has to do with actively marketing for merchant payments. You may have seen they started a whole new campaign on TV, really tied into college sports. Again, that younger demographic that tends to really plug into to Venmo. They also mentioned, representative of Venmo, that they expect that roughly 40% of this season's holiday shopping will start using large language models rather than traditional kind of web search engine optimization. So they see that as a real proving ground. And one of the challenges is the merchants are going to have to make sure that they still are visible to their potential customers in those scenarios. On the AI front, I thought that was a good opportunity to dive into our first interview. Tucci Bullet, a serial entrepreneur, and has founded a company called Eloquent AI. They're one of the curated startups that Money 2020 presented on stage that they felt were of particular interest. I certainly agree with them on this one. So track down and let's have a listen. I think it brings everything into focus. I'm here with Tucci Bullet, who I just met. She is the founder and CEO of Eloquent AI. You were one of, I guess I'd say, the curated startups that were brought on stage here at Money 2020. And your solution, to me, kind of almost tied the show together in terms of what you're offering as a solution. Thanks for talking on short notice.
Well, thanks, Glenn. It's great to hear that.
Well, one of the things that really caught my ear was agentic AI seems to be the big story. You very specifically opened by talking about your solution as an AI operator as opposed to an AI agent. Can you explain the distinction you're making?
That's correct. Agentic AI is an important step moving from raw foundation models to applications. It's the application layer. We can get agents to do different things for us. But agentic AI really focuses on conversations. When we look at customer support solutions today, off-the-shelf, Intercom, Decagon, Sierra, they focus on talking. If you want the agent to do anything for you, as the bank, as the credit union, you need to build the APIs. And if you are actually using third-party software for your core banking or other platforms, those vendors need to have the APIs for any task to be done. Whereas operator is a doer.
Okay. You also pointed out that you are the only one right now built specifically, purpose-built for the financial services industry, which I guess is even more important as a doer because you've got to be even more specific in what it is you're doing, right?
100%. So we own our own model called Oratio. Oratio is built specifically for financial services. Within that, we embed your regulation, both federal and state level regulation, so that whenever we are taking any action for you, any operations for you, it's compliant with the regulation you are subject to. And also, if we come back to agent versus operator, let's say a customer comes in, they're asking about the status of their onboarding, why they haven't still got the loan they applied for, or they are disputing a charge, a transaction, basically. You can't just talk to them. Talk is cheap, right? At some point, someone has to do something.
Yeah.
And the current agentic solutions would just escalate to your support team. That's not really saving you any time. In the end, all jobs end with your team. Our approach is very different. You hire Eloquent AI like a team member. You just give us a seat in your CRM system, in the software you use for fraud investigations, etc. And just like a team member, we can log into those systems and navigate those systems to take the actions that you want to take.
And what I heard also is what you're looking for is a video. And a video gives you the information you need to actually execute. What would we call that? That would be the code, or?
Absolutely. So typically in the past, only large organizations had access to this kind of technology because training was very burdensome, very expensive. Now, actually, all we need is someone in your team who does the task, takes a video of themselves doing the action step by step, logging into necessary systems, scrolling down, filtering, selecting, writing in the boxes what they need to write. And that video is enough for us. Single video that we can get in 10-15 minutes is sufficient to create the code for automation. So we basically onboard you as a new customer, we get the video for the first task that you want to automate, and within a day, we can deploy that automation. From then on, you no longer need to do that task.
Within a day?
Within a day.
Wow. Now, you mentioned before your co-founder is a machine learning professor.
That's correct.
And I think you said the code that is actually the foundation for this, it's not something you just came up with. It's been around for, I think you said 5 years?
Exactly right. So the technology behind this that uses both large language models, but also computer vision, what we call multi-model, because it mixes together vision with language understanding, has been developed in a research lab for over 5 years.
A research lab. So this really, we're taking it now into the commercial realm.
Absolutely. We are taking it with my co-founder is a professor of machine learning, and he was leading that research lab. And over time, they achieved the reliability level for a financial application that is something that you can trust, you can reliably deploy to be able to take action.
Got it. One of the questions that was asked by one of the judges at the session I saw you at, he said, this sounds a little bit like robotic process automation, RPA. How would you draw the distinction there?
It's a great question because this is the new generation of automation. So we do see customers coming in, they did some RPA, they had frustrations with it because it's very hard to train, number one. It easily breaks. If you change the simple thing in your flow or in your user interface, you have to reprogram the whole thing
almost
again.
Like a screen scrape. As soon as you change something, some presence
it doesn't work anymore, exactly. And thirdly, it doesn't have conversational capabilities. So if you look at those three things, now the training time is down to 1 day. We don't need a lot of data to train on. It's versatile. It doesn't break. Why? Because we are not programmatically training, do this, then do that, after this, do that. No. We are giving it intelligence at a much higher level. And for example, it's very common for our credit union customers to not have necessarily all the documentation ready. They may not have detailed SOPs for every action. No problem. Someone in their team would take the video recording, send it to us. We will create the documentation first automatically for them that the operator will follow.
And obviously there's some iteration. They can see it, make sure that it's correct
100%.
in the way they want it.
They can change it, they can adjust it. Also in the feature, they can change their process. They might want to adjust the SOP. And then the automation at the back of it comes automatically. We don't actually have to go and recode it. It can continue with automation directly from that SOP.
I think you just touched on this. You mentioned that you've got 6 financial institutions in production, and they're live. And you also, as we were talking just before we started recording, they tend to be regional bank size, but it sounds like there's no constraint to going down to the billion, 5 billion level. That should not be a real hindrance in terms of the scale?
100%. The 6 we are talking about are the banking customers. These are regional banks or national banks, but we do also have smaller customers already deployed going live. Some of them are fintechs. You can think of like banks based in San Francisco, like the Mercuries, etc. But we also have customers that are in the 1 to 5 billion region, where they, rather than keep adding to their BPO or keep adding to their sales team, support team, they start delegating some of these tasks to an operator team member.
And you mentioned San Francisco. You're based in San Francisco, but this is not your first rodeo. You've done an AI startup and an exit before, and that one was based in London, I believe, right?
Correct. So Eloquent AI is headquartered in San Francisco. We also have an office in London. We also have international customers that we are covering. And yes, you're right. My previous business was another AI business, turning large-scale unstructured data to intelligence for financial institutions.
Again, financial institutions.
Very similar.
So you know the field.
Yeah, absolutely. We are very close to the field. This came out of a need from our customers to have a doer AI solution. Because a lot of people we were speaking to were really not happy that a lot of AI keeps talking, but it doesn't take action. So we wanted to take the step.
All talk, no action. I
Exactly.
love it. Okay. Tuğçe, this is wonderful stuff. If people want to find out more, what's the best way to do that?
The best way to reach me is on LinkedIn. It's Tuğçe Bulut, and just DM me on LinkedIn and we will be very happy to chat.
And I'll put the link right in our show notes.
That would be great.
Thank you very much, Tuğçe Bulut.
It's my pleasure. Thank you so much.
So one more point about AI before we move on. There was also a great session, 7 of the, I believe, 8 largest credit unions in the U.S. on stage at one time, the main stage at Money 2020. And one of the comments, I don't want to make a mistake. I'm not going to attribute it to one of them because I can't recall which one it was. But when they were talking about the use of artificial intelligence, they said, we will not let AI say no to a member. Which I think, again, it goes back to that kind of human in the loop point that we've talked about before. And the idea is, AI can do a lot of good things, but we don't want it to just summarily deny a loan application or something like that. So if the answer from AI is no, we are not willing to approve something, the commitment, at least at this point, that they're saying is no, a human will at least take a look at that one before we take that down that next path. Another big topic, before we get to stablecoin, another big topic was buy now, pay later, and had a very favorable kind of angle to most of its coverage, which is kind of counter to some of the media attention these days. You may have seen there was a very unflattering article in the New York Times Magazine about buy now, pay later, just I think 2 weeks ago. I forget exactly when it was. Another one of the startups that Money 2020 put on stage, called Rentflow, used buy now, pay later as kind of the reference point to help explain their product, which I found interesting given that buy now, pay later, well, on one level, it's all the rage. Everybody's talking about it, and it's really a good way to explaining things. It does have, in my view, a relatively kind of negative connotation in many circles as well. So the fact that they were actually using that as a way to kind of hitch their new product to that star, I was a little bit surprised by. But it was a very interesting product, and as you'll see, I don't think it's really buy now, pay later. Let's have a listen to my conversation with the 2 founders of Rentflow. With the steady hum of some type of industrial machinery here at Money 2020 that hopefully Jackie will be able to edit out for us. I'm here with Alex Morin and Joseph Tallingen, the co-founders of Rentflow, another one of the startups that really caught my attention here at Money 2020. You're fairly early on, right? I mean,
Yes.
How long have you been live with your product?
Yeah, so we started working on the product early this year, and we officially launched back in May, so 6 months
May.
ago.
Okay.
With one customer.
Yeah.
So the way you described it, which I thought we had this conversation a bit before, is BNPL for small business rent payments, which, as I think about, I guess given how hot BNPL is these days, that's a great way to get people's attention. But it's really a cash flow management solution, I guess, is the way I would think about it.
Exactly. Yes. You've got around 1 in 2 small businesses across the U.S. paying their rent late.
That amazed me. I mean, and as we talked about at the booth too, I guess part of it is, if you think about, obviously payroll is going to take precedence.
Yeah.
Exactly.
You've got, I don't know what other ones, but this probably...
Utilities, personal rent.
Yeah, so, I mean, they're not going to get evicted in the next month. So that's probably just, whether despite best intentions, this is the one that's going to fall off.
Exactly.
So part of your model, though, is that you actually receive your funding. You are paid by the tenant, correct?
Yes.
Exactly. We charge the tenant.
And that's, which is, if I think about it from a typical BNPL standpoint, when the merchant is the one that's actually making the payment, but you've run into no resistance on that.
Yes, and there are 2 reasons. The first is that it allows the tenant not to pay the late fees when they pay their rent late, and it allows the tenant not to take expensive debt. So they found our solutions cheaper than the other option out there.
That makes sense.
And the second reason is that by giving it free to the landlords, we have a prime distribution channel where landlords can distribute to all their tenants.
That's another point that I mentioned is it's, I guess you started off, it's kind of word of mouth on the tenant side that. How did you market to the tenants? That was your first entree to the market?
Exactly. We started bottom up. So we started with ads on Facebook, Instagram, and Google. So the worst thing you could possibly do. But we have 7 times the average fintech click-through rate. People respond extremely well to the fact that we're a sort of crossover between a budgeting tool and a flexible financing tool for smaller amounts that are actually specifically the needs that they need each month. So we have huge response from that, and we started bottom up from there. And then we essentially have an aha moment with landlords when we say, hey, the check that was on time for once is actually coming from us. And so we're going to go top down.
And then the landlord says to everybody else he rents to, hey, I've got this. So, I mean, that's the key. You send out a check on behalf of the tenant.
Yes.
Exactly.
They get their payment on the first of the month, whatever rates due. And then you offer options in terms of basically the kind of maps to the cash flow characteristics of the tenant?
We do. So we send out whatever the landlord wants, checks, ACH, payment portals, whatever they want. And then the tenant essentially pays us back in 2 to 4 auto installments per month. So they have time to have cash flow coming in and then the auto withdrawals coming out, and a bit smoother than lump sum. And we also have a plan where we do revenue based. So we take a % of daily sales essentially on a fixed daily basis. So we really flex with billing cycles, one-off, seasonality.
And if they have a good month, it shuts off early? Or?
So that's up to the tenant. We put it in the rainy day fund, and they can withdraw from it as needed.
So if you have a bad month.
It is a budgeting tool,
okay,
at the end of the day.
Really financing
that makes
and budgeting
great sense.
stuff.
Okay. And you mentioned you can connect in and they can make the payment by ACH or whatever.
Yep.
And that's another key is you are actually, the requirement is that they connect you to their account, which also gives you the data capability to understand when this money is coming in.
Yeah, exactly. So we know day to day what are the income influx, what are the expenses, and we auto debit on auto pay whenever the installment is due. It can be weekly, it can be daily. And we can also actively monitor if a business is going down or is doing great, and we can basically reduce proactively the credit line for the next month.
I think I saw it's not necessarily as you pointed out, it's not necessarily 4 even installments. Depending on the creditworthiness, you may require that they pay more than 50% or more than 25%.
Yes,
or
so
less,
the down payment can be more or less, depending on the risk perspective. If they make good payments for like the past 2 months.
Somebody asked this question during the session. You are actually funding, because effectively you're floating loans, which does not make you a bank because they are business loans.
Yes,
that's one piece. And you're actually doing that off your own balance sheet right now?
Right now, yes. And we grew to a point where we grew that very, very fast. So that is why we signed on the debt line to keep scaling with these partners.
So you do have a debt line in place of
10 million.
10 million. And then assuming you max out on that, I think you said that down the road a sponsor bank might be a possibility?
That
Yes,
might be
exactly.
the second lender sponsor bank that will give us the licensing and the scaling capabilities to go above and beyond.
Because
No, go ahead.
Oh, no, I was just going to jump off of what you were saying. Right now, we are in this perfect sweet spot in terms of the rent amounts and the SME category to not have licenses across any state. But we see people who have very, very high rents wanting to come in. And so, we need to ramp things up for that.
Sure.
If we want to graduate from that sweet spot we're in right now.
No, you just mentioned multiple states. You're based in San Francisco. Are you already offering this in all states or most states?
Yes, we're offering all states.
Okay.
Yeah.
We have a bunch of users in California, Texas, Florida,
New Jersey
Berkeley,
malls.
Jersey.
Big New Jersey malls
Oh,
are
really?
a nice
Oh, wow.
yeah.
That's interesting. And again, it's all word of mouth or Facebook word of mouth. I mean,
Yes.
And
you don't have
refers
anybody on the ground.
from landlords, basically.
Right.
Yeah.
That makes sense too.
Exactly.
A little bit further off topic, but you're based in San Francisco, but you're both originally from Paris, correct?
Exactly.
And here's the part that I thought was interesting. You're a Y Combinator company,
Yes.
but you came here because I asked is this same solution necessary in Paris? You came to the States to work the Y Combinator program with a different
Very
product
different,
idea
yes.
and then pivoting.
Yeah, exactly.
How common is that? I found that to be very interesting.
It's actually really common
Really?
at YC.
To go, because it sounds like you went to a totally different area.
Yeah. People pivot a lot.
Every good story has a pivot.
Yeah.
For example, there's like the big bank called Brex, which is a big bank right now for startups. They initially came to YC by doing VR headsets. And then
Really?
they saw that the market was too early at that point. It was 2012 or something like that. And then they pivoted because they realized that in the batchmate there were many international candidates, basically people, and the international people struggle to get a bank, basically to get the funding because they don't have an ID, they don't have any local address, they live at Airbnb. So they were like, we should launch a bank just for those people. And then they scaled because it's really appealing for startups and startup founders. And they came with a completely different idea.
It's a perfect example of it's the management team,
Exactly.
not the product.
Yeah.
So-
Exactly. Yes.
Yeah.
Exactly.
And clearly, you guys are a great management team, and I think you've got a very interesting product. If people want to find out more about RentFlow, what's the best way to do that?
Yeah. Well, we have both of our emails, which is the simplest way. But I think maybe the best channel will be contact@therentflow.com.
The RentFlow.
The RentFlow.
TheRentFlow.com.
Yes, we are the only RentFlow. So contact@therentflow.com is probably the best way to get both of us.
Yeah.
Wonderful. Alex Morin and Joseph Talajan, thanks so much for taking the
Thank
time. Really
you.
like your solution.
Thank you
Thank you so much.
The other big topic, as I mentioned, the kind of the overarching theme that I saw at Money 2020 was stablecoin. And again, a very favorable presentation of stablecoin overall. The biggest piece of news, and I'd say along with that Google Cloud PayPal announcement, I would say the second biggest item that I took away as terms of the new product launch there, or new product announcement, was Western Union teaming up with Solana and Anchorage Digital, a couple names we've spoken about before in the crypto and blockchain space. And that is, they're working together to launch a new Western Union stablecoin, USDPT. And I had to go back and find the DPT stands for Dollar Payment Token. So make your, again, pegged to the dollar value. Talking to people, I think it's interesting. It's one of those glass half full, glass half empty things. I'm thinking, wow, this, Western Union's pretty well positioned for this one. They have the most to gain. And somebody else kind of took the opposite side and said, yeah, they've also got the most to lose if they don't make this work, because that's their whole business, moving money cross-border. And this is potentially going to redefine the way that's done. So Western Union figures, well, who better to redefine it than the people who were doing it in the first place? They're positioning this as an off-ramp, basically, the bridge between the digital and fiat economies. And the point that they make is the vast majority of economies still work on a fiat basis, and that's probably not going to change anytime soon. So these two different economies and different types of transaction flows are going to have to coexist, and they've already got the off-ramp set up through their agent network of places where you can cash out, and that's the point that they're making on this one. They look to go operational with it in the first half of 2026. I've posted the link to the announcement that Western Union made. Again, that's one of these topics I'm sure we're going to be digging into more deeply. They were far from the only new stablecoin that was announced there, but the one that I think probably has the most real-world relevance in the near term. We've talked of Paze a few times, the digital wallet owned by Early Warning Services, a couple times in the recent past. Serge Elkiner, the general manager of Paze, was on stage on the first day of Money 2020 on a session called referring to the digital wallet wars, which obviously is very near and dear to what they're doing. One of the other people on stage made this comment that I thought sets it up nicely. He said, "I've worked on 20 wallets over the last 20 years. They all failed because the consumer never showed up. With AI, those consumers are now showing up." So we're back to that question of, the two-sided market, how this thing all comes together, and when is the right time. And here we go with AI, with yet another way for this to come into play. So I thought it was another opportunity for us to check in and see what kind of progress, a lot more as we've talked about recently, television advertising, holiday shopping campaigns, clearly a bigger splash being made by Paze. So let's check in and see what they got going on. Pay no attention to the buzz in the background. It just means we're here at Money 2020. I'm here with Serge Elkiner, the general manager of Paze. You were on stage on the very first day, pretty much early in the agenda, talking about the virtual wallet wars. We just spoke recently when you announced your Hawks partnership. Thanks for taking the time again.
No, thank you for having me. Super excited to follow up with you.
Well, one of the things that was my kind of key takeaway quote from the session yesterday is that, you're obviously dealing in a two-sided network, merchants and consumers, and you mentioned the two-sided networks are a marathon and not a sprint. And you're in market now with Paze. You've been for a while, but this seems to be the time that you're really kind of taking it to the next level.
Yeah, no, and you're 100% right? I mean, we need to get the merchants to take Paze as a payment method, right? It takes time to have the right product market fit. So we really launched in September of last year, 2024, the product. We had 2,000 merchants plus about 80,000 SMBs that are taking Paze, but we really wanted to have the feedback from the merchant before we went on and get more merchant to join the Paze ecosystem. And so we worked really hard late last year, this entire year, right, up until, let's say, Q2, Q3, to make sure that we go to the next set of merchants with the right product value, right? And so we've done that. We're now, in the next 6 months, you'll hear us announce many amazing merchants that are joining the Paze ecosystem, where you get consumers to get habituated, so much more frequent transaction versus, United Airlines. That's a great partner of ours.
But a one-time,
of course, yes, 1, 2, 3 at the best, right? If you travel a lot during the year. So that's where we're at right now.
And the other panelist that was on with you from a company called Prove, he had a quote that I thought was interesting too, is that it takes time to convince people to do things the hard way, or to not do things the hard way. So it's another kind of the point you make about repetition. Okay, I buy an airplane ticket and I use Paze, great, but it's something where you kind of have to get into the habit of doing it, and because you see it at site after site after site, correct?
So yes, I think his point was you see it site after site, and then you get your trust of the brand higher. For us, as we've spoken before, right, this is a product that comes from your banks.
Yes.
So the trust factor is what we're really banking on. So it's trust, seamless, secure. So it's an easy to use way of checking out brought to you by your banks. So hopefully you actually don't even notice that you're using Paze to bring it up so seamlessly and very securely because you trust your bank to do the right job. Right?
And the point about bringing it up, that's one of the other things I wanted to touch on, is the whole notion where you differentiate is this is not a standalone app. There's no download of an app. And the other key is that there, in theory, in most cases, no data input because it's all pre-filled. Your card is pre-filled by the actual card issuer.
Correct. So two of the highest or most important point of Paze, as you just said, no download to do, as well as when you want to check out, you identify yourself with your email or your phone number. It's preloaded. You have your card information that are at the bank.
Forget the card number, forget the CVV, all that
and
stuff.
And you cannot input an outside card number today, right? It is either it's at your bank or there is no way to use it for Paze, so it's much more secure.
And I'm guessing that when we get to, if these are, online transactions, in many cases they have a shipping component. It pre-fills the stored address, but then you can change it if you're giving a gift or something like that.
Correct.
Interesting. We also got into a bit, actually one more point about that too, in terms of the two-sided market. Again, I forget what the number is, 70,000, 80,000, because you were owned by some of the largest banks in the U.S. you've got the vast majority of credit cards already preloaded in the system, whether their holders really realize it today or not.
Correct. I think we're around 60-65% of market share among the 7 banks that are part of Pace today. We also have other banks joining the Pace ecosystem. So we just had, a credit union that joined
Correct?
Star One Credit Union that joined the Pace ecosystem. The team is hard at work onboarding a few more issuers. So we're really going to announce again in a few more months the new issuers that are joining. But this is really for everybody. It's for every bank and every credit union to participate in the Pace ecosystem and to offer their consumer a trusted, secure, and seamless way of checking out.
I notice on your site you've got the 7 banks that are part of the consortium, and there's an 8th tile for Elan. And that is also means that there's a whole lot of portfolios that run through credit card portfolios that run through Elan. So it may go beyond that already.
100%. And Elan is like U.S. Bank, so it's like they are providing that service to a few thousand or dozen plus credit union and community banks. And so I think that's where the reach is really important for us to make sure it's not just for the 7 owner banks. This is really an inclusive product. It's for every financial institution, banks, credit union, as well as like any merchant that wants to participate. So we've also announced deals this year with Fiserv, with like WorldPay, with Nuvei, and we're continuing to work with enablers, right, to increase the reach of the two-side network.
The VAR strategy, you can get out there to all of them.
Exactly.
You made another point, and I was not familiar with this yesterday. You're originally from Belgium, correct? So you mentioned, the whole notion of identity, in terms of fraud and everything, and you were actually speaking as part of the fraud forum.
Yes.
The identity solutions, you mentioned that in Belgium, and I think you said Sweden, there are actually global identity schemes. I told you it's a busy time around here at Money 2020. The global identity schemes that are actually bank operated in those countries, which I was not familiar with.
Yeah, so in Europe, they started this entire identity aspect of authentication, identification, and then creating digital identity schemes. So the Nordics were the first one to launch some of these projects. And in Sweden, it's called Bank ID. It's the same in Norway, it's the same in Denmark. They're all called Bank ID because they're run by the banks, which has the highest trusted factor among
it's used beyond banks as well.
It's used beyond banks, and it's usually a partnership that's like a private-public partnership. So the banks build the technology, run the technology, but it's used by all the governments to secure the authentication and the identity of their citizens and their consumers. And in Belgium, it's called It's Me. Once more, it's owned by the banks and the government. So in Belgium, 20% of It's Me is owned by the Belgian government. So there is really this notion of public-private partnership to create a digital identity scheme. And I think that banks are really the right place to start to give that to consumers.
And the point you made, ironically, is in this day and age, trust in banks exceeds trust in government. So a public-private partnership sounds like a pretty good solution, and we seem to be kind of fond of those in this country too. Serge, great stuff. I know the conference is just getting going, and I know Pace is coming strong here, so looking forward to hearing more what you've got. Anybody who wants to find out more, what's the best way to find about the touch points?
Pace.com, that's for sure the best way, but reach out, selkiner@pace.com is my email, so feel free to reach out. Glenn, thank you so much for having me. It's always a pleasure.
Thank you.
Oh, I can't go without talking about this one very briefly as well here at the end. Our friend Kyle Hopman, the chair of the NCUA, this is back to the stablecoin topic. He blew my mind. He had one of the best analogies, metaphors, whatever you want to call it, that I'd heard yet. One of the things he was talking about, again, with stablecoin is that his agency, the NCUA, along with several other governmental authorities with regulatory responsibility, are on the hook by July to actually put the meat on the bones of how the Genius Act will actually be put into practice in the real world. And that's something he's going to be spending a lot of time on. But then he reached into his pocket and said, we're sitting here in Las Vegas at the time, obviously, and said, in a town that was actually built on a foundation of the original stablecoin. And he pulled out a poker chip. And then he started talking about, I thought it was one of the better ways to kind of bring stablecoin into the here and now. And again, we're sitting at the Venetian, and he says, if you go to gamble in the Venetian, you get poker chips. You're not using your dollars. You're not paying with credit card and everything. You're using your chips.
And at the end of the match, you can cash them out. And you know they're going to be worth $1 for dollar. There's a sister casino and a sister property right next door called the Palazzo. He says, if you want to go gamble at the Palazzo, they're interoperable. You can actually use the same chips. If you want to go further down the Las Vegas strip and go to somebody else's place, you're going to have to go off-chain, and you're going to have to actually redeem your stablecoin, your chips, get your money back, and then go back and reinvest at the other casino. And if something were to happen and you had any concern that maybe that some glitch had happened and maybe it wasn't really worth $1 anymore, you'd suddenly have a bit of a fiasco, and people would line up waiting to kind of cash in their chips. And maybe somebody else might show up in line and say, you know what, you never know by the time you get to the front of the line if I'll have any money back. I'll give you 90 cents on the dollar right now. I thought it was a fascinating analogy, and shows that there's nothing new in the world. But Kyle's always an interesting guy to hear, and I'm very curious to see exactly how he has that play out. I'm sure we'll be seeing more in terms of public comment period and preliminary rulemaking and things along those lines. And again, one of those topics we'll be staying with very closely. Oh, that's it. A lot for 1 week, a very productive trip and a very productive conference at Money 2020. There's a blog that we'll be posting with a little bit more on some of these other topics and the key takeaways from the conference. Encourage you to take a look at that and encourage you to respond and let us know if you were at the show. Let us know what you thought, if you had any other key takeaways that we haven't covered. See if you agree or disagree with any of the points that were being made. No rest. We're going right back out onto the conference circuit at Venture Tech this coming week. And we'll hopefully by next week have a whole series of new interviews for you to check out. You can check out the Best Innovation Group at big-fintech.com. You can always find me via the Best Innovation Group or via my firm 154 Advisors. Again, my name is Glenn Sarvati. You can find me on LinkedIn. You can find the Best Innovation Group and our Grand Poobah John Best on LinkedIn as well. We always love to hear from you, and we always hope that if you enjoy these, you'll check back again. We have new content pretty much every Tuesday. If you don't go straight to the Best Innovation Group website at the Media tab and hear it there, you can always check us out on Spotify, Amazon, Apple Music, etc. And if you like, subscribe, or whatever you're so inclined to do, you should get a reminder when we have new content out there. As I said, that new content should involve another batch of startups next week, so I hope you will join us. Thanks as always for listening.
Check back each week for the latest from the Big Cast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big Fintech. Email info@big-fintech.com. Or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.